they're suppressing the volatility in markets, but the streets don't feel normal, don't feel okay, don't feel natural. You can feel it in your bones, and that suppressing volatility is unnatural. You got to wake up and landscape your lawn every morning to make something look okay when naturally there's entropy involved in the universe, you see? And then it's, well, what's going on? What are the forces that are colliding, causing the stress? But then why is gold going up and Bitcoin not? Well, gold is relief for China, for Russia, for some pensions. Bitcoin is, again, it's a truth machine. It's telling you the temperature. It's the thermometer. And it's going to matter most when things start to burn down.
There's a strange tension in the air right now, a quiet that doesn't feel earned. Markets look calm on the surface, volatility appears muted, and official narratives insist everything is under control. But beneath that surface, something feels deeply off. Gold keeps pushing to new all-time highs, while Bitcoin chops sideways. And for many investors, that disconnect has become confusing, frustrating, and even unsettling. Jack Mallers argues this isn't noise, it's a signal. And more importantly, it's a signal most people are misreading. What we're witnessing isn't stability, it's suppression. Volatility hasn't disappeared, it's been displaced. In this video, Jack Mallers, CEO of Strike and one of the most outspoken voices in Bitcoin, lays out a thesis that goes far beyond price charts and market rotations. He argues that volatility is being artificially dampened in financial markets to preserve confidence in a fragile system, while the real consequences are showing up elsewhere, in everyday life, in social cohesion, and in the mental and emotional strain people feel just trying to survive. Gold, he says, is rising because it offers temporary relief to institutions and nations trying to escape decades of bad monetary policy. Bitcoin, on the other hand, isn't offering relief, it's offering truth. It's the thermometer. And right now, that thermometer is telling us something uncomfortable about where the system actually stands. If you value serious, no-nonsense Bitcoin analysis, make sure to like the video, subscribe to the channel, and watch this all the way through. Because what Jack is pointing to here is much bigger than any short-term market move. Thanks for tuning in, and enjoy the video.
Where I said Bitcoin's not a hedge, it's a solution. You see, gold is a hedge, Bitcoin's a solution. So why is gold leading? Why is gold repricing now? Because everyone's cracking the window. Trump has not got his new Fed chair. We have not officially started QE. We're in this weird era right now where they're trying to paper over the volatility and keep things calm. We haven't seen the liquidity. We haven't seen the reindustrialization yet. And Bitcoin's just telling us the truth, you see? But don't make no mistake, windows are cracked. The house is burning down. The roof is on fire. In order to get some mother oxygen in this, all windows are cracked. So this from Luke, central banks are buying gold aggressively. The price of gold is the whole point, as noted by former IMF chief economist Ken Rogoff when he advocated in 2016 that global central banks shift from US dollars to gold. Because unlike US treasuries, gold has no limit on its price. Now, he screenshotted Ken from the IMF, so I want to read it and then give some commentary. Ken wrote, "I am just proposing that emerging markets shift a significant share of the trillions of dollars in foreign currency reserves that they hold now. China alone officially has reserves of 3.3 trillion into gold. Why would the system work better with a larger share of gold reserves? Well, the problem with the status quo is that emerging markets as a group are competing for rich country bonds, which is helping drive down the interest rate they receive. With interest rates stuck near zero, rich country bond prices cannot drop much more than they already have, while the supply of advanced country debt is limited to tax capacity and risk tolerance. Gold, despite being in nearly fixed supply, does not have this problem because there is no limit on its price. That's the big idea. There is no limit on its price. Sovereign debt has a limit on its price. Governments can't afford for these things to be volatile because implied in the debt is how much it costs. If everyone started dumping US bonds, we've talked about it on the show, The government would do yield curve control because they can't afford for yields to go to 10, 20, 30%. They can't afford that shit. Guys, Trump is begging and pleading to get a new Fed chair in because he can't even afford the 3 and some change. Our interest expense is like $1 trillion a year. So the point is, you need to collateralize yourself on something that's inelastic, that can go up a lot in price, meaning you can't manipulate it and you can't inflate it. Things like gold and Bitcoin. And so that's cracking the window. You see, getting some oxygen, getting some price inelasticity in this. You see? So if we go on, this is gold against the stock market, against the SPX. And this is my way of saying, things like technology and stocks and Bitcoin, they are more a reflection of liquidity. The world has seen nothing ever like Bitcoin. Bitcoin is a once in a generation invention. Bitcoin is we are redefining money as we know it. Okay. So nothing is like Bitcoin is the purest expression of currency debasement. It is the thermostat or the thermometer, the thing that tells the temperature in the sauna. Okay. But if you were to say the stock market usually trades on liquidity. Okay. The stock market, as I've said before, it doesn't trade on priced earnings. It doesn't trade on cash. The stock market is a Ponzi retirement account for the United States. Right. And so when you look and you see gold destroying the stock market, this again tells me that the liquidity isn't here. The AI deflation, the Bitcoin deflation, the internet deflation, ramming its head into the fiat inflation hasn't yet resolved itself. And so while it's on fire and things are starting to burn down, windows are being cracked. Things are being repriced in gold terms. So I thought this tweet was kind of a nice way to contextualize it. This is Bitcoin over total US debt. And this is a good way, in my opinion, to really visualize that it's working, but it kind of ebbs and flows. Because again, Bitcoin is not a hedge, it's a solution. Bitcoin is not cracking the window. Bitcoin is measuring the temperature. Bitcoin matters most when we either have to fix the HVAC, which is pay off the $38 trillion, or evacuate the house. That's when Bitcoin matters the most. And it depends, what do you want to own? You want a hedge? Sure, you could take a hedge. Go ahead, hedge. Hedges are, the thing about hedges are 1% of your portfolio. Hedges are 5% of your portfolio. Hedges are, I like the way things are currently. It's just in case. That's not me. I don't know anybody that understands Bitcoin and owns 1% of their portfolio in it. Not a single person. If you understand Bitcoin, it's over 50% of your net worth. Easy. It's not a hedge. I'm working to revolutionize and fix the system. I'm looking to replace the money with something that works. I'm not looking to hedge the money.
Jack's argument becomes sharper as he reframes the gold versus Bitcoin debate. Gold is repricing first because institutions and central banks need an asset that can absorb stress without breaking the system, something inelastic, politically neutral, and capable of rising without triggering immediate consequences. Bitcoin, however, isn't being used that way yet. It isn't cracking the windows or letting oxygen into the room. It's simply measuring the temperature. And that's why its price action feels frustrating, because Bitcoin responds not to hope, but to truth. As Jack explains, Bitcoin matters most not when the system is being patched, but when it's forced to either fix itself or abandon the structure entirely. And that leads directly to the question he asks next. If volatility isn't in markets, where did it actually go?
So the last one is just where the volatility went. So to rewind here, we started by saying they're suppressing the volatility in markets, but the streets don't feel normal, don't feel okay, don't feel natural. You can feel it in your bones, and that suppressing volatility is unnatural. You got to wake up and landscape your lawn every morning to make something look okay when naturally there's entropy involved in the universe, you see? And then it's, well, what's going on? What's what are the forces that are colliding, causing the stress? And it's technology is deflationary. Technology is making all of our lives easier, all of our lives more efficient, things more accessible. Just by owning Bitcoin, your life gets cheaper over time. I've been a Bitcoiner for 13 years. My life, guys, if Bitcoin is a 50% CAGR asset, that means it doubles every 18 months. If it doubles every 18 months, think conversely. That means my life has been getting cheaper, half off, 50% off every year and a half. Everything I want, vacation, education, food, housing, it's averaged 50% discount every 18 months. That's crazy, but that's the way things should be. As humans build tools and innovate and build technology that's more accessible, more scalable, solves more problems, life should be getting better, not worse. And then you're like, okay, I get it. I get that these worlds are colliding. I get this era that we're living through. But then why is gold going up and Bitcoin not? Well, gold is relief for China, for Russia, for some pensions. Bitcoin is, again, it's a truth machine. It's telling you the temperature. It's the thermometer, okay? And it's going to matter most when things start to burn down. Or when listen, if the house is on fire because there's no liquidity and an inflationary system is getting its kicked by deflationary technology, when they start printing a lot of money and the temperature cools off, close the window. So where's the volatility actually realizing itself? There's been a lot of talk of Minnesota recently. Not going to really get into that. But this was posted by the Minnesota Department of Health. Suicide. Title of this is Suicide Holds Steady in 2024. Suicide looks like gold. Consistent, unapologetic, year-over-year growth for suicide in the United States. So when I say the S&P 500 looks fine, markets look okay, but somehow that volatility is being realized in the streets, in the everyday person. Guys, what the Like, this is not a casual stat. Like, oh yeah, I guess that makes sense. The S&P 500 keeps making all-time highs, but everyone year over year is taking their own life. What the This is the rage to policymakers, to central planners. So the tweet I showed earlier from Tyler, I omitted this photo from it because I want to bring it back this episode full circle. So Tyler posted, the boomers have no idea how radicalized Gen Z has become, how radicalized the youth has become. Low implied volatility in asset prices aren't showing the vol. The volatility has been transmuted, has been transferred to the social contract, to the people, to the youth. The world is only going to get more dangerous from here. While first turning institutions, the institutions of the future, the revolutionary institutions, the strikes, the 21s, they're being built now. They won't take over power until the fourth turning institutions officially collapse. A lot of instability is on the way, but that doesn't necessarily mean the government won't paper over the assets. And he adds to it a TikTok, a viral TikTok, where the text on the screen says, here's a funny prank idea. Make people study for 16 years while putting them into extreme debt only to replace them with AI. This is how radicalized the youth has become. Make us go into extreme debt to ever, if we want, get an education, which requires us to get employed. Oh, you want to be a lawyer? You want to be a doctor? You got to go to school for 10 years. And you can't afford that. So you're borrowing from your future to get it. So you're going to have to study for 90% of your current life, only for us to say, you don't get a job anymore because AI is doing your job. So you're never going to get the job you want. You're never going to have the family you want. You're never going to afford a home. You're never going to get a car. You're going to own all. But the stock market might make a new all-time high. You don't get to ever own any of it. You don't have excess cash flow to buy assets, but the markets don't show much volatility. The VIX looks decent. This is incidents of assassinations charted since 1800. Assassination attempts in the United States of America are going parabolic, only second to the mid-1800s, which was the Civil War. I'm trying to convey the level of societal distress. The elite, the central planners, the government has to make a decision. The tension is getting too much. The house is burning. Windows are cracked. But guys, cracked windows doesn't stop the fire, okay? They have to put out the fire. How do you do that? We're going to fix the HVAC? We're going to call the ambulance? We're going to evacuate the home? But the world's only going to get more dangerous, more violent.
This is where Jack's message becomes uncomfortable and unavoidable. The volatility didn't vanish. It migrated. It moved out of asset prices and into people's lives. While equities grind higher and volatility indices stay subdued, stress is manifesting socially, psychologically, and generationally. The system has succeeded in stabilizing prices by destabilizing people. Rising debt burdens, collapsing affordability, and shrinking opportunity aren't reflected in the S&P 500, but they are reflected in despair, radicalization, and loss of trust. Jack isn't making a market argument here. He's making a human one. From this perspective, Bitcoin's range-bound price isn't a failure, it's honesty. Bitcoin isn't designed to comfort holders or maintain illusions. It's designed to expose imbalance. When liquidity is withheld, Bitcoin reflects that. When monetary expansion accelerates, Bitcoin reflects that too. That's why Jack insists Bitcoin isn't a hedge you sprinkle into a portfolio. It's a response to a broken system. A hedge assumes the system mostly works. Bitcoin assumes it doesn't. And that distinction matters now more than ever. What Jack is really forcing us to confront is the cost of currency debasement, not just in purchasing power, but in life itself. Bad money distorts incentives, delays adulthood, erodes dignity, and strips people of the ability to plan a future. It affects whether families can form, whether effort feels rewarded, and whether hope remains rational. When innovation should be making life cheaper and easier, but money makes it harder and more fragile, something fundamental has gone wrong. And Jack's conclusion is blunt. The system is past the point of reform without more printing. The question isn't whether they'll choose inflation, it's whether society can withstand the delay. For Bitcoiners, this is the reassurance hiding beneath the noise. Short-term price weakness, negative headlines, and manufactured fear don't negate Bitcoin's role. They confirm it. Bitcoin exists precisely for moments like this, when official stability masks real decay. As we close out the year, this is the moment to step back and think clearly about what really matters beyond price candles, beyond headlines, beyond the daily noise. If Jack's analysis resonated with you, take a second to support the channel by liking the video, subscribing, and sharing your thoughts in the comments. I truly appreciate everyone who's spent part of their year here. Wishing you and your families a peaceful end to the year, clarity in the year ahead, and the conviction to position yourselves wisely for what's coming. Thanks for watching, and I'll see you in the new year.